Welcome to the All Financial Hour podcast with Steve All.
Now, this is the time of year when we hear predictions of what's ahead for investors. Here's portfolio manager Adam Hetz on CNBC.
One of the most profound themes in the market that we're going to feel through 2024 and 2025 is the long and variable lag of this historic spike in interest rates we've been feeling. We don't know what could be ahead of us in the next year or two as far as the repercussions of all those higher rates transmitting through the economy. It doesn't mean investors need to be balanced, stay invested, not move out of the market, not move to cash, even if those 5% cash rates are really enticing. Stay invested, stay balanced, but I think err on the side of being defensive through higher quality equities and very high quality investment grade fixed income.
All right, so Steve, now is the time to get out that special magic 8-ball that you have under your desk. Do you agree? And if someone doesn't have that appetite for risk in the market, is there some sort of fixed income alternative?
Well, I look at it to the part markets are going to go up, down, or stay the same. That's about the only guarantee that compliance will allow me to give. It's going to do one of those three things. And I believe that he is very much in line. We still don't know the effect of what these higher interest rates are going to do. It's going to come in years to come. So we have to look at it. But I think our investment strategies have to be based on no matter what happens in the market. I don't think anybody does really good if they're retirement plan works, and the only way it's going to work is the skies are going to be blue. It's never going to be rain. There's going to be no thunderclouds or storms in the future. I think that's an unrealistic picture. So we start to look at where are interest rates going to go. I don't think they're going to go a lot higher. So I think we are going to get stabilization in the fixed income and bond markets. One of the things that I have liked during this time of transition is the fixed indexed annuity. Now, there's two basic types of fixed index annuities that I'd like to talk about here for a minute. Most people, when they hear the word annuity, only think about income. And I think that's one of a great tool if that's something you need. If there's a gap between your living expenses and your lifestyle, if you can guarantee that money with a personally funded pension, I think that's a wonderful alternative. But what if you're that person out there that your Social Security, your pension, basically covers your living expense? Do you need additional income? In my opinion, probably not. So that I look at one that I'm looking at a fixed index annuity for protected growth. All I want is that fixed index annuity that's tied to a market index, but I can't lose money due to market volatility. And I think that's the most important thing. Well, if I have a floor of 0, there's usually a ceiling. How are they going to do me, and where are they going to limit my growth? They can do it by participation rates. They can do it by caps. There's a lot of different ways that they limit the amount of earnings that you could have. So I look at it right now. Well, are interest rates higher or lower than they were 4 years ago? They're obviously higher.
Mm-hmm. Yeah.
That means the insurance company, the caps are higher. So we might have the availability of a possible replacement of an annuity that you might have that could be 3, 4, 5 years old. Okay, so we look at that. Now, if it looked and it worked in your case, you might have a longer surrender charge. But if you're doing something for a long period of time, the surrender charges are not as much of a problem. John and Nancy, they had bought an annuity a long time ago. You know, it was through the surrender period. And they actually looked at it and say, that was geared for income. That's about $1,000 to $1,500 more than we currently need. So we had to look at it. I know there are people out there that have bought annuities in the past thinking they're going to need income of X, and now they don't need that much income. What could be done? One of the possible solutions could be, let's look at that annuity. Let's say, hey, let's take part of it and move it to a different income annuity that can give me the amount of income that I'm currently needing. The balance could go for protected growth so that I can take a thing that was going to do a job for one thing and split it and now do it for two. Because I believe that there are people out there that have bought things that they're not sure of exactly how they work, or they've got an annuity that has a very low cap in it. Give us a call now. Ask for the annuity X-ray. Let us look at yours to find out, one, What is the best way that you could possibly use it within your own portfolio right now? Or would it make sense to possibly replace that and do something different with the money? Could we possibly increase the amount of growth? Possibly. Could we possibly increase the income? Possibly. We need to do that analysis. Call now. Ask for the annuity X-ray. Let's look at what we might be able to do with an annuity you've already purchased.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.